Hello and welcome back. So today in this session we are going to discuss about the Indian accounting system. I hope you might have already gone through our previous videos of Indian accounting system or double entry system. To continue with this, in this session we are going to study about the complete life cycle of Indian accounting system, and also we are going to explain almost all the transactions involved in an Indian business or the businesses carried out in India. As you already know, Indian accounting system is based on the double entry system. In double entry system, there will be at least minimum two or more entries with sum of all the credit and debit entries are equal. Here we are going to understand all the transactions involved in businesses carried out in India. Let's consider that you have started a business. Let's take for example a stationery shop. Consider that you have started a stationery shop to trade the stationery items like paper, pen, pencil, etc. Consider that you started a company with a capital investment of 5,000 rupees. The first entry would go to cash book and ledger will be your capital investment. So all the capital investments or the investments done by the director or a proprietor or a partners will be under the capital ledger. So let's understand how these entries are entered. As you are investing initially 5,000 rupees, so the capital ledger will be credited by 5,000 rupees and your cash book will be debited by 5,000 rupees. You can see this how the ledger entries are done here. So capital ledger is a account or a capital account of all the directors of a company or the partners or a proprietor of a company. So all investments are registered in a capital ledger. For any business, you need to trade. A trade means you may manufacture a material or a product and you are going to sell it, and other way is you purchase materials and you trade those materials and you sell them with some profit. Or it could be a service oriented business wherein you provide a service, various services to, and you sell those services to earn money. Let's consider a simple business wherein you trade, as I told you earlier, you trade in stationery items. To start a company, you have invested 5,000 rupees, and to trade you need materials for your trading. Let's consider that you purchase some materials like paper, pen, pencil from other company and you sell them. So first example would be purchasing trading materials. Let's consider you have purchased some paper, pen, pencil, paper clips from a company called Ideal Techno Enterprises. You can see the bill here, invoice of your purchased goods. So the invoice will be issued by Ideal Techno to your company or your stationery shop. The typical bill is here, tax invoice is here. It contains all the materials you purchased Say for example, you purchased a paper with the HSN code 4802 and quantity is mentioned and also rate and GST amount and the total amount, that's including GST and your material cost. Similarly, you purchase a pen, pencil and a paper clip, and HSN code is always mentioned in the tax invoice. So the total amount is 2061 rupees and total GST amount is 261 rupees. Let's understand how this tax invoice is or the purchased items are registered in a ledger or a cash book. Let's consider this transaction as a credit transaction. So, as you know, credit how to enter the ledger entries of a credit transaction. Let's understand this in detail again. Here, the party is Ideal Techno Enterprises. So we need to pay the payable of 2061 rupees to Ideal Techno Enterprises. So the Ideal Techno Enterprises will be credited by 2061 rupees, and as it is a purchase, so purchase register will be updated. I mean to say the purchase register will be debited by 1800 rupees, because here we are deducting the GST amount from the total amount, because the actual cost of the purchased amount is 1800 rupees. 2061 is including GST, as we need to maintain the separate registers for GST, CGST, SGST and IGST. So we have to take only the product or a trading material amount as a purchase register amount. So the purchase register or a ledger will be debited by 1800 rupees, and as you can see here clearly, CGST is 130 rupees 50 paisa and SGST is also 130 rupees 50 paisa, as these transactions are within the state transactions. So only CGST and SGST is applicable. And in the same way, CGST ledger is debited by 130 rupees 50 paisa and SGST ledger is debited by 130 rupees 50 paisa. So this is how an purchase is registered in your ledger book. And also to complete this transaction, say for example, for this transaction you have to pay a transportation charges, or you made a vehicle to transport your purchased goods from your vendor shop to your stationery shop, and that would be if it is a 200 rupees. Let's consider this, how this 200 rupees you have paid it as a cash will be registered in your ledger or a cash book. Here you have paid 200 rupees, so cash book will be credited by 200 rupees, and as you can have, this is a transportation charges. If transportation charges if is a considerable expense, you would keep a transportation ledger separate, as this is a stationery shop and transportation charges is minimum charges which account for your profit and loss. So we are going to add this transportation charges in miscellaneous ledger. So miscellaneous ledger will be debited by 200 rupees, wherein we are going to write a description as transportation charges, or you can write a detailed description like to whom you have paid, or the vehicle number or the vehicle which you have used, and also if you want you can mention the invoice number, so that in future it's pretty clear what exactly you purchased and why did you pay 200 rupees as a transportation charges. For this, you can even raise a payment voucher, wherein payment voucher contains all the details like date and also voucher number and the particulars. Particulars could be the transportation charges with detailed description of vehicle number and the driver name or the uh, payment, one who has collected the payment, etc., etc., and also the amount mentioned as 200 rupees. Usually payment voucher contains, as it is a payment, so receiver signature is important. So you can take a receiver's signature at the bottom of the payment voucher. We have seen investment, capital investment, then and purchase of trading materials, and then also we saw the example of payment voucher. So once you purchased, to complete the trade, you have to sell it. Let's take an example of sales and let us see how the entries are made in a ledger. For example, your stationery shop, in your stationery shop already you have a stock of paper, pen, pencil and paper clips, etc., which you have purchased. So now you are going to sell it to your customer. Let's say one of your customer, SSE Works, purchases a set of materials from you as shown in the tax invoice here. So whenever you sell an goods to any party, you are going to raise a bill for that or a tax invoice. And tax invoice contains, as you already know, it contains HSN product, HSN code, and a relevant GST charged on it, and also the rate, quantity, etc. So consider this sales as a credit sales. Okay, so here you are selling a set of products as shown in the tax invoice to a party, your customer SSE Works. Let's see how this tax invoice is registered in an ledger. So first of all, as it is a credit based sales, so first the party should be debited. Here the party is SSE Works. So SSE Works ledger account is debited by 181 rupees, which is the tax invoice amount. In the same way, the sales, as it is a sales, so sales register or the sales ledger will be credited by 160 rupees. Because we are not updating sales register with a 181, we are updating it with 160 rupees because we need to keep a track of CGST, SGST and IGST separately so that we can file the GST later on. So here the sales is in the sales ledger only the product cost, actual cost before taxation is considered, which is 160 rupees. So sales ledger or the register is credited by 160 rupees. The CGST and SGST are the two taxes which are applicable in an equal percentage. So CGST is credited by 10 rupee 50 paisa and SGST is also credited by 10 rupee 50 paisa. One thing you can observe here is total debit entry and sum of all the credit entries remain same. So this is how an sales is registered in an ledger. Now let's consider that the party to which you have sold The transaction is incomplete without a receipt of that amount, or in term it could be amount or a check or a DD. Let's say the party to whom which you have sold the products, SSE Works, pays back you the payable of 181 rupees by in the means of check. So in this case, you have to raise a receipt voucher to SSE Works. So here the total amount received by check is 181 rupees. As any check or DD is always deposited to a bank, so amount directly transferred to the bank. So as you have a bank account, usually all the trading or companies or businesses in India have a current account. So let's say we have an current account and check is deposited to the to that current account. Here, let's see how this receipt voucher is registered in a ledger. Here, the bank is debited by 181 rupees and SSE Works ledger or the SSE Works account is credited by 181 rupees. Let's see some more examples of sales. We already know how the credit sales is done. Now let's see example of a cash sales. In cash sales, the party is not important as it is cash sales. We may not require the party name to, or the party account is neither debited or credited as it is only a cash transaction. So let's see example of a cash sales. As you can see here, tax invoice. One of your walk-in customers comes to your stationery shop and purchases some paper clips, pencils, etc. for rupees of 455 rupees and 80 paisa. The actual product cost here is 400 rupees and GST charged is 55 rupees 80 paisa. Let's see how this cash sales is registered in our ledger books. Here, as you can observe, three or four ledgers are affected. One is a cash because it is a cash sales. Second, as it is a sales, so sales ledger will be affected, and apart from that, it has a GST part also, that is a taxation part. Here two GST accounts are affected. One is a CGST and SGST. So here, as it is a cash sales, so we have received a cash. So cash book or the cash ledger, in general it is called a cash book, is debited by 455 rupees and 80 paisa. And in the same way, sales ledger or the sales register is credited by 400 rupees. Here we are deducting the GST part of the taxation part. It is the actual cost of the product before adding taxes. So that is 400 rupees. So sales register is credited by 400 rupees. And in the same way, CGST ledger is credited by 27 rupees 90 paisa, and also SGST is credited by 27 rupees 90 paisa. So again, as I was mentioning again and again, here if you observe the total credit entries and the sum of all the debit entries are again same, that is 455 rupees 80 paisa. Now you can see that the cash balance has increased. So when you sum up all the debit and credit entries of cash and you deduct debit from credit, you will get the exact cash balance, or it is called as the cash in hand, or if it is after the day is closed, it is called the closing balance, and the same closing balance will be the next day's opening balance. Let's understand more about closing and opening balances of ledgers or the cash book in our next coming videos. Now we have understood purchase, sales and payment and receipt. Now let's see one more different type of transaction which we do it in our day-to-day businesses and day-to-day activity. So let's consider it's basically an internal transaction. Let's consider that you are depositing rupees 3000 rupees from your cash book or the cash in hand to your own bank account. Here you can observe that you are depositing your own money, your own cash in hand to your own bank account. So one thing you can observe that here that it is neither an payment nor a receipt because your net asset is not affected. It is just a transfer of value from one account to another account. So this type of entries is called contra entry, and previously it was called as a journal voucher or a journal entry. So both are same, journal entry or if it is in a printed format it is called a journal voucher, and now in modern times it is called as contra entry. So let's consider an example of depositing rupees 3000 cash from your cash book to a bank. Let's see how the ledger entries are done. As we are depositing from cash, cash book or the cash ledger is credited by 3000 rupees and your bank account is debited by 3000 rupees. As we in our previous example, we have purchased a material, a trading material from an Ideal Techno Enterprises with amount of 2061 rupees for our trading materials. Now let's consider that we are paying back that 2061 rupees debt or the payable to Ideal Techno Enterprises through check. So here it is again it is a payment voucher. Again, as the payment voucher could be issued for cash as well as for a bank transaction also. Here either we are paying with cash or bank or through check, DD, whatever, but the payment receipt should be the payment voucher should be raised. In this example, we are paying 2061 rupees to the party Ideal Techno, our vendor Ideal Techno Enterprises, by check. So here bank account is credited by 2061 rupees and the party account or the vendor account Ideal Techno Enterprises is debited by 2061 rupees. So this is how a payment voucher is generated for the bank. Let's see some more examples and some more different type of transactions we may get in our businesses. Let's see an example of an indirect income. So in our previous video we have briefed about indirect income. So basically the income or the profit we generate out of our core business, that is in this case the core business is trading of stationery materials as it is a stationery shop. So all the income or the profit we generate out of trading is an direct income. Let's see what's an indirect income. Indirect income is income which we gain or which we earn not through the core business. What I mean to say is, say for example, you have a deposit of some amount in a bank. So usually when you deposit in a bank, the bank will give you interest on your deposit for a certain period. Or if you have a fixed deposit or you have a recurring deposit, all bank accounts will give you interest if it is a deposit. So The interest earned on deposit is an indirect income, because here it's not getting an interest or depositing is not the core business. It is just an amount we earned out of uh, our extra revenue. So it is an indirect income. Let's see how this indirect income is registered with an example. Say for example, we have some amount already in this example. We already have a current account in a bank and we have some amount in the bank, and for that amount in the current account the bank gives us the interest of 50 rupees. Let's see how this 50 rupees transaction is registered in our ledger. Here bank is debited by 50 rupees and indirect income ledger is credited by 50 rupees.